Welcome back to AFTechTrades, your go-to channel for mastering the art of trading. Whether you're a seasoned trader or just starting, today's video is going to be a game changer. We're diving into the best price action trading strategy that's guaranteed to elevate your trading skills. You'll learn where to place your take profit, where to put your stop loss, and how to maximize your gains while minimizing risks. Trust me, you don't want to miss a single second of this video, so stay tuned. But before we get started, smash that like button, hit subscribe, and turn on notifications so you never miss out on our latest trading insights. Let's get into it. First off, let's dive into the fundamentals. What exactly is price action trading? Simply put, price action trading is the analysis of raw price movement over time. It's about reading the market without the clutter of indicators, focusing solely on price as it moves through various levels. By understanding price action, you're able to see the market's true intentions, whether it's preparing for a breakout, continuing a trend, or reversing direction. Think of price action as the heartbeat of the market. Every tick, every move, every pause tells you something about the underlying strength or weakness of a trend. You're not just looking at the price, you're interpreting what that price movement means in the context of the market story. Now, why should you care about price action? Well, because it's universal. No matter what you're trading, forex, stocks, commodities, price action is the one constant that you can rely on. It cuts through the noise, giving you a clear, unfiltered view of the market. And once you master this, you're no longer at the mercy of lagging indicators. So, how do you start mastering price action? It begins with understanding key concepts like support and resistance, candlestick patterns, and trendlines, which we'll cover in detail. Let's start with the basics: support and resistance. Support and resistance are critical levels on your chart where the price tends to react. Think of support as the floor and resistance as the ceiling in a trading range. When the price approaches these levels, it's likely to either bounce back or break through, which creates trading opportunities. But how do you identify these levels accurately? Look for areas where the price has bounced multiple times in the past. The more touches, the stronger the level. But remember, support and resistance are not exact prices, they are zones where the price action is likely to respond. Next, we have candlestick patterns. These patterns are essential for understanding market sentiment. Each candlestick tells a story, whether the bulls are in control, the bears are dominating, or the market is in indecision. Let's go over some of the most powerful candlestick patterns. We have the pin bar, which indicates a potential reversal. The engulfing pattern, which shows strong momentum in a new direction. And the doji, which signals market indecision. Understanding these patterns in context, whether at a key support or resistance level, can give you a significant edge in predicting the market's next move. Finally, let's talk about trendlines. Trendlines connect the highs or lows in a trending market and help you visualize the market's direction. A trendline break can be a powerful signal that the market is reversing or continuing in its current direction. Drawing a trendline requires at least 2 points, but the more points that touch the line, the more reliable it becomes. It's essential to use trendlines in conjunction with other price action tools to confirm your analysis. Now that you're familiar with the key concepts, let's get into the actual trading setup. Here's a detailed, step-by-step guide to entering a trade using price action. Step 1. Identify the market trend. Before you even think about entering a trade, you need to know whether the market is trending up, down, or sideways. You don't want to trade against the trend, it's like swimming upstream. Here's an example of how the uptrends, downtrends, and ranging markets looks like. Ranging market can also be referred to as sideways trend in the displayed picture. Use higher time frames like the 4-hour or daily charts to determine the overall trend direction. Once you have that, you can zoom into lower time frames to fine-tune your entry. Now let's move to our step 2. Step 2. Mark key support and resistance levels. These levels are where you'll look for trading opportunities. Remember, the more times a level has been tested without breaking, the stronger it is. Keep an eye on how the price reacts when it reaches these levels. Is it bouncing off strongly, or does it look like it's going to break through? This reaction will guide your next move. Step 3. Look for price action confirmation. This is where candlestick patterns come into play. You want to see a pattern that confirms your trade idea. For instance, if you're looking to buy at support, a bullish engulfing candle is a strong signal that the buyers are stepping in. Wait for the candle to close before entering your trade. This confirms that the pattern is valid and reduces the risk of false signals. Step 4. Enter the trade. Your entry should be just above the high of the confirmation candle in a buy setup, or just below the low in a sell setup. Always use a limit order to ensure you enter at your desired price, and avoid chasing the market. Let's take it a step further with some advanced tips to refine your trading setup and improve your success rate. Tip 1. Use multi-time frame analysis. While you might execute your trades on a 15-minute or 1-hour chart, always check the higher timeframes to understand the bigger picture. This will help you avoid trading against the dominant trend and confirm your setups. By aligning your trade with the higher timeframe trend, you increase your odds of success and avoid unnecessary losses. Tip 2. Combine price action with volume. Volume is the fuel that drives price movement. By observing volume, you can gauge the strength behind a price move. For instance, if a breakout happens with high volume, it's more likely to be sustained. If the volume is low, be cautious, it could be a false breakout. Tip 3. Look for confluence. The more factors that align with your trade idea, the stronger your setup. This could mean a candlestick pattern at a key support level, confirmed by a trendline bounce and high volume. Confluence reduces risk and increases your confidence in the trade, making it a key component of successful trading. Now, let's discuss the most critical part of any trade, where to take profit and place your stop loss. Your stop loss should always be placed just beyond the level that invalidates your trade idea. For instance, if you're buying at a support level, place your stop loss just below that support. This way, if the market does break the level, you're out before it moves against you too much. For take profit, you want to aim for the next major level of resistance in an uptrend or support in a downtrend. A common approach is to aim for at least a 2-to-1 reward to risk ratio, meaning your take profit is at least twice the distance from your entry as your stop loss. This helps ensure that even if you lose some trades, your winners will more than make up for it. Let's look at an example. Imagine you're trading in an uptrend, and you see a bullish engulfing pattern forming at a strong support level. You enter the trade just above the high of the engulfing candle, set your stop loss just below the support level, and your take profit at the next resistance level. Simple, effective, and powerful. Let's put this strategy into action with a live example. Watch how we analyze the market, set up our trade, and manage it all the way to take profit. As you can see, by following the price action strategy, we're able to enter trades with confidence, manage our risk, and maximize our potential profits. Remember, patience is key. Don't rush into trades, wait for the market to come to you. There you have it, traders, an in-depth guide to the best price action trading strategy. By mastering this approach, you're equipping yourself with the tools to trade confidently and profitably in any market condition. If you found this video helpful, make sure to like, share, and subscribe to the AFTechTrades channel. Hit the notification bell so you never miss an update, and join our free Telegram channel where we drop daily signals and trading tips. Link is in the description below. Let's build this trading community together, and as always, happy trading, guys!